Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Friday, February 14th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn up 3.5 at 497. March soybeans were up 7.5 at 1037.5, and March Chicago wheat was up 13 at 590 3/4. This morning we had an export sales announcement of 100,000 metric tons of corn to Colombia for 24-25. We are now 9 days out of 19 settlements done for the spring crop insurance discovery period. Corn is currently 469.5, and soybeans are at 1058.25. Good morning, guys. Just a reminder for listeners out there, it is Valentine's Day today, so please be sure to remember that. It'll get you some points going into the weekend. Looking at markets, yesterday afternoon, had President talking about, this idea of reciprocal tariffs, certainly caused the dollar to correct a little bit here. I think that's given us a little bit of strength in our markets. But I guess, Justin, maybe give us a few thoughts here this morning. We'll put a bow on the week and, see what you're up to.
Yeah, I mean, obviously a lot going on with, the Trump team, and we've talked about it a lot, but what's going to happen with the Russia deal. He was talking about cutting defense spending, meeting with China, Russia, getting together, trying to cut down the nuclear arsenal. I mean, all fantastic things. I think it's such a breakneck speed that the market's having a hard time digesting it because we haven't seen this before, personally. Oh. So yeah, I mean, I think positive things on a world front. Some people obviously don't like the way things are getting done, but a lot of good things seem to be in the works. The markets, talking about before the show, like corn, for example, it's been like nearby corn feels like it's been liquidating by going sideways in a 20-cent range. And now it's right back towards the highs. So markets look pretty good to me, especially wheat, corn, soybean oil. See if beans can catch a bid. They, kind of broke down to some key moving average areas with, South America, a lot of hedge pressure, a lot of selling pressure. But overall, I think it's still pretty constructive backdrop here for commodities.
Yeah, and if you look at, we talked a little bit once that announcement came out about this idea of reciprocal tariffs. I think obviously a ton to digest, but I think you made a couple of great points just in terms of like some of the fairness that becomes across the scales, right? And you've talked about the oil market, for instance, in our country being just a huge disadvantage for our producers. And maybe this brings us back more to an even playing field.
Yeah, it was nice seeing one of Trump's speeches yesterday talking about, U.S. ag, going to be a beneficiary of this because we've been dumping foreign product on our markets for years, which I think we talked about it yesterday even. So hopefully there's some smart people in his ear just pointing out some of the obvious things that we're doing that are pretty stupid, subsidizing foreign production, stuff like that. So, I think it could be good, so at the end of the day, obviously there's always a fear there of, cutting some farm subsidies, and you can argue that they probably shouldn't be there, just to give direct payments to uncompetitive growers, but make the market more efficient and make a better domestic, market for all farmers. I think that's the best way to do it. So hopefully that happens.
Sure. Ben, what's on your mind this morning?
Yeah, I'm just going to start off with beans. I look at beans, Justin mentioned that we tested some major moving averages. You're looking at getting close to maybe a 50% mark in Brazil and soybean harvest. Soybeans domestically could still be kind of a giant. I'm not sure that I want to be outright long it, but I certainly don't want to sell it after a 50-cent break and major support. chicken or the egg, right? Is beans refusing to break because corn is so strong, or is corn refusing to rally because beans have been weak? I know that sounds simpleton, but they definitely have a tug on one another on new crop to a certain degree. The wheat market is the tide's going out, I think, unless they just decide to have that be their short leg for a while. But I think they're going to have some issues with that as well. Markets feel good, always susceptible to pullbacks. I think demand markets in general, speaking of corn, are some of the harder ones to trade. They kind of trade sideways and wear you down and wear you out, and then they downtick, and you think that, you know, maybe this is coming to an end, and they rage back. And that's been the MO for corn for, you know, just since going on the, you know, maybe since we traded through 440, 450, and then obviously we got rewarded with a pretty bullish report. So I'm excited for what the next few months can bring. I think buying opportunities in corn are hard to come by, but I think they'll come. So we'll see. We got a lot of things on the horizon this week with March expirations going off. There's a huge open 30,000 calls in the March $5 line. And then certainly there's going to be, with the move that we've had, there's going to be a lot of sorting through options positions, trying to figure out where we need to land and sort that out. So we talked before the show also about the proclivity to break ags into the last half of February. It seems a lot of people are convinced that that has to happen. And I think a lot of that corn, a lot of those beans that had to move have already been sold. So I'd be careful with that mindset that this has the full scale roll over the next 2 weeks. And if it does, it's probably an opportunity in corn.
Yeah, one thing to add, you know, I think it's interesting. We've talked a lot about, you know, there's going to be a lot of debate on acres. Obviously, going into the March 31st report, a lot of people on Twitter posting charts and ratios and historical figures. So, you know, I think, you know, we've talked about a lot on this show is, you know, the cost difference this year versus previous years. And, you know, when you tend to get a lot of corn acres, it's the ratio and it's higher flat price. So certainly the corn market feels like it's trying that. Both of those things have happened. It's the soybean versus corn ratio has slid down to 2.2, which is one of the lower ones, you know, going into planting, and flat prices rallied. So we'll see what I think this year will be a good lesson on what all that means in the end, you know, on how strong these more normal 50-50 rotations have become over the years. So I'm kind of interested just as a history lesson here, because the market's trying to do it. We're already, you know, over halfway priced, so that's gonna be harder and harder to move that ratio. So we'll see. I mean, I think we're trading 95 plus. I'll say plus. I think some people are trading 97 or some much higher number, but I think the market is generally trading at least 95 million corn acres. So it's going to be interesting. This, you know, we were talking about it, new crop corn and even new crop spreads, like D25 versus D26 is inverted. It's not normal for a market that thinks you're going to get an abundance of corn acres. So I'm personally just curious on how this is going to play out, you know, now that we're getting towards the end of it.
Yeah, and you bring up a great point. You're going to be, well, today you're basically halfway priced, you know, for your crop insurance guarantee. The next 2 weeks are going to be critical to do that deep dive and be sure that you got yourself set up the right way. There's a lot of new products and a lot of different subsidies that have come down that you can use to your advantage. So certainly give us a shout if you want to bounce some ideas, because I know we've been hammering on it for, it feels like months now, and here we are. So it's coming quick. That's very good. We got a couple minutes here, guys. Let's quickly move over to wrap up livestock. Rye slaughter on pace to be the smallest here for a non-holiday week in a year, which is kind of interesting. And then hogs took a little breather after a 10-day run. So why don't you wrap this up for the week?
Yeah, you know, packer margins are definitely a problem right now. So we're seeing that lower kill and at least we're seeing lower cash prices at this point. So, I mean, there's pretty quiet trade yesterday. I mean, it didn't look like too much was happening, maybe a little bit of 202 in the South. Generally, it's been about 3 to 5 lower so far this week, but I think there's still some more to go. So we'll see how that shapes up. It did look like the dress bids coming in at 321 in the North. That was up a little bit from earlier in the week. So we'll see how that kind of shapes up. But overall, like we're trying to hold this 50-day moving average support on the technical side, and we've really kind of narrowed this basis a little bit with February. So board's already kind of priced in a decent break here, but it doesn't mean it just necessarily needs to stop. We are seeing new lows in the beef. Choice was down $1.86 yesterday, making a new low at 317.40. So, I think just overall we're seeing a lot of cautious trade going into this next week, especially just because on next Friday, on the 21st, we got a cattle on feed report. As far as the hogs go, it's been kind of a wild ride, kind of fell back a little bit from contract highs. Product market is really strong. Cash market back up to 90. 75 is up $1.50. I mean, these are prices that we haven't seen since last summer. So it just feels like the demand is really, really strong right now. Maybe supplies are a bit tighter than what the market was really expecting, but we have a big speculative long here that really wants to push this thing a lot higher from what it looks like. A big jump in open interest yesterday, 35.76 up in commitment. So overall, the news is still really supportive. We'll see if we get any kind of headline volatile trade because of the tariffs, but overall, it just seems like demand is strong, and it should pretty much continue to trend a little bit firmer into the summertime. So we'll see if that holds true.
All right. Appreciate the update. We made it, fellas. Another week in books. Brings us to our favorite time of the week. Certainly Valentine's Day edition should be interesting. Brian, Fun Fact Friday. What do you got for us, buddy?
Thanks, Dan. Happy Friday, everybody. Yes, for all you hopeless romantics out there, this is the St. Valentine's Day Fun Fact edition. Origins date back to early 6th century BC when the Romans would celebrate Lupercalia. This they would perform a sacrifice of animals and then slap women with their hides, which they thought would increase fertility. Then a lottery would come about and these men would be matched up with these women. I think we can all agree here, like, let's not try this at home tonight.
I was just going to say, I tried that.
Yeah.
I don't know.
It's not going to go over well when I get home.
Yeah, right. 145 million greeting cards are exchanged today, second to only Christmas. The inventor of the candy heart, Necco, they actually started out by making medicinal lozenges, but then switched over to the candy industry, which produces 500 billion candy hearts. They're going to have to change up their little menu here because red dye number 3 has been now outlawed. So they'll have to reshape that industry a little bit there. The first chocolate-shaped chocolate box, the heart-shaped chocolate box, was first made in 1860 to jumpstart some sales, and that was the son of Cadbury. So that's a little history on that. Teachers get the most Valentine's Day cards. I think that's probably to try to sweeten them up to get a little bit better grades out there. 250 million roses are grown just for Valentine's Day.
Jeez.
Yeah, so let's get to the economics of Valentine's Day. Speaking of roses, 2.6 billion is spent on roses today. The total spending today is 27.5 billion. That's about average of $200 a person. 6.5 billion is spent on jewelry, 2.5 billion on chocolate, 5.4 billion on a dinner tonight. 47 million people will get an unwanted gift. Ryland, no.
I've already got one.
There'll be 6 million marriage proposals on Valentine's Day. Yes, so those are some interesting economics of today. My daughter, who is a watcher, says, "Dad, your dad jokes are really bad." So, how about give everyone on the show their Valentine's Day name? So that was basically your first letter of your name paired with your birthday month. So for me and Ben, our Valentine's name is Wild Brownies. Dan, you are Nasty Muffin.
It fits.
Jason, you are Loving Pie.
Oh, I do.
Yep. Justin, you are Loving Nugget.
That's my nickname.
Wow.
I can't leave out Dustin here. He is Nasty Dumpling. And last but not least, Ryland, you are Dirty Nugget.
That's not very Valentine's Day.
Oh, man.
Happy Valentine's Day, everybody. Enjoy
Happy
the
Valentine's
weekend.
Day, Brian.
Oh, that's a good one, Bri. Well done, buddy. Oh man, that's gonna get a lot of miles in this office. couple of things to point out here before we close. Monday, markets are closed, observance of President's Day. They will reopen Monday night, 7:00 Central. So if you need anything, get in touch with your consultant there. But during the day, there is no market. We will also, the War Room will be back on Tuesday. So with that, also Jack will have a little more information in the outro. We've talked about it a number of times, but if you're looking for bounce some ideas, talk about crop insurance, some of the things we're doing with marketing, give us a call. As we go through February and certainly into March, these are big decisions. So we'd love to visit with you, and we got some real good offers for folks that are coming in and to be on board with AgYield. I appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. That'll keep you up to speed on everything that's going on with AgYield. And again, thanks to everybody who supports the show. We'll do a quick rundown here. The market's just opened. March corn up 5 1/4, 498 3/4. March soybeans are up 10 3/4 at 1040 3/4. And March Chicago wheat's up 15 1/4 now at 593 3/4. We're doing this live every day that the markets are open, streaming live on X, Facebook Live, and YouTube Live. Happy Valentine's Day, everybody. Hope everybody has a great weekend, and we look forward to talking to you again next week.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.